Hey, everybody. Welcome to week 68 of the Ag Commodity Corner Plus podcast. Today is the 24th of July, 2026. It was a week where it looks like geopolitics and weather was top of mind. Mo, what's the title?
Yeah, we're talking about a lot of the seas around the world and all the attacks. And is this causing some higher risk? Is it a threatened risk? We'll talk about where we think markets are headed. So let's get into it. This is your weekly quote summary chart. I always have lots of highlights, and then when we say that every week, that we have a lot to talk about. But this week we did. So, look, we've got. I've highlighted corn because it was a higher weekly close. You have beans, new highs for 2026, despite the little correction in wheat today. Meal was higher. We've talked about livestock producers managing that risk as you get into 27. Soybean oil, despite the higher crude, you didn't see that market move much this week. Canola did close higher. Chicago wheat closed lower for the week, so a little bit of a disappointment, but it was new highs for the move and new highs for 26, new fresh highs for Kansas and Minneapolis, despite maybe a key bearish reversal. We'll get into that technically. CME lean hogs adding to some gains. Now August up to that almost 103 new highs for the move. Crude oil obviously up 834, and then the euro dollar to new lows for 26. So let's start off with all of these escalations across the globe.
Yep, let's start with Europe. So in Europe, Ukraine has intensified attacks on Russian-linked tankers and other vessels operating in the Black Sea and the Sea of Azov. We touched upon that last week and the prior week. Ukraine strikes have also disrupted operations at the Caspian Pipeline Consortium, CPC, suspending loadings and putting Kazakhstan's oil exports and production at risk. Ukraine's ag minister said reports of official discussions about alternative mechanisms to ensure Black Sea grain exports are not true, instead saying...
So, Abhinash, can you just stop there for a sec?
Yeah.
That news was the news that sent the market down at 6 a.m., but we have some breaking news at the end of the day, and that's why the market recovered. Keep going.
Yep. So just to go back to that point, Ukraine's ag minister said reports of official discussions about alternative mechanisms to ensure Black Sea grain exports are not true, instead saying they must ensure safety measures and continue those measures to function normally as they have over the past few years.
So the ag minister in Ukraine is denying. They're trying to keep the flows going, maybe use some mechanisms, but that was a concern early this morning, and then they denied those reports. They're still trying to safeguard flow, but I have a funny feeling Putin's not happy. And who knows what happens on the weekend with headline news. We could walk in on Monday and trade to new contract highs. And you can see this. This is that Novorossiysk port. And, here's your Sea of Azov. And then you got the port of Odessa through Ukraine. They're trying to use this port as an alternative route, but it takes fuel to get down. It takes time, and Ukraine's bombing this port during the night. So at night, these ports are not open, and some of the larger shipping companies are now canceling any flows to some of these ports. So I'm not sure we've resolved this. I mean, I think wheat got overextended short term, and so corrections are always healthy. But let's talk first about the war in Iran, and then we'll talk about some charts.
Yep. So from there, if we move over to the Middle East's two critical oil transit choke points, which are the Strait of Hormuz and now the Bab el Mandab Strait, are facing concurrent security threats from Iran and its Houthi allies. So this is a choke point that threatens Saudi Arabian oil supply.
So, the new escalation in the war is because of the Houthis. They control 2/3 of Yemen. They want to control the entire country. I think I think Houthis are being backed by Iran, and they know that they can inflict economic pain by just threatening one ship or bombing a ship tanker, and then that provides enough threat that everybody goes away. We need to stop this, and you've got a fight now with the Houthis, Iran, Lebanon against the U.S., the Saudis, and I'm not sure the Saudis are going to get involved, but the Saudis and Israel. And now the breaking news at the end of the day, that's why crude fell, was that Pakistan, the old mediator who signed the first MOU, now has China's backing. This is critical because if you go back to when Trump and China signed their trade deal on May 17th, China said to Trump, you should have never started this war and it shouldn't continue. They're not happy. They haven't said much, but I can't imagine that they're happy because it's removing some of their interest in that Iranian oil. So who's going to win the war? I mean, when you're dealing with an unreasonable country called the Revolutionary Guard, what do? Can you win that battle? No, you walk away. I think you're going to just get stressed. I think Trump needs to walk away, but he started this, and those straits need to be, they're international waterways, and we cannot charge tolls. So, the complaint from Rubio is that you can't trust Iran, and they'll never agree to an agreement. They'll sign it and then change their mind down the road. So, hard to say how this one plays out, but we're hoping that diplomatic ways will win out. And so if we look at the charts, this is Kansas City wheat. So this is the reason why you saw this big spike this night. Look at the move. The first move was normal, sort of, gradually stair step higher. This one's 90 degrees almost. And so you got the key bullish reversal lower. In other words, the daily move today was wider than yesterday, and it closed lower than yesterday. But it was also a weekly close, and the weekly close was higher than last week at 732.2. So one day doesn't make a trend. Remember that. We could walk in on Monday, and because of headline news on the weekend with Russia and Ukraine, and this thing could trade even higher. Remember, the 38% retracement from last week's podcast was what? Everybody should know that if you're learning and watching. And then on crude, same thing. The first round was a gradual increase, stair step. Now you're 90 degrees. We said if you break 87, where does it go? Everybody should know that number. Technically, 99. We could retest it next week, depending on what happens. Trump needs to back away from his attacks. He wants to really unleash hell on Iran. Rubio and Pakistan need to talk him out of it because we can't afford this inflation. We can't afford these wars. We need to end them. So hopefully better heads prevail over the weekend. Don't forget to try our program. This week we were talking to our members about what to do with diesel and fertilizer input costs for 27. Not that again. Anyways, don't let fear decide make your decisions, because I think a lot of farmers are using that emotion to make some bad decisions. We won't know if we made a bad decision until we get down the road, but just be careful there. So
let's spend some time more looking at what's happening with the North American, especially the U.S. growing season. U.S. heat wave is damaging U.S. corn and soybean crops and trimming yields. The U.S. heat wave and flash drought in the U.S. northern slash central plains is weighing on crop conditions in North Dakota, South Dakota, and Minnesota. The midday weather forecast was drier in 10 days with extreme heat in over the next 7 days.
So this is your soil moisture map, 0 to 40 centimeters, literally your topsoil. If I showed you a map of 0 to 100 and 0 to 400, it's even worse. This was at the beginning of June. Sorry, at the end of June. And this was what it is now. And so this is your flash drought. And what is this? This is bullish for grain prices. And the reason why is because it's trimming yields. You could talk about the Midwest and Iowa and Illinois and Indiana, they're looking fine, but I can argue with you there. But let's assume that 20% of the United States is in trouble, which is in this area, the northern central plains. You're trimming yields. There's absolutely no way that some of these private estimates are as high as 188 to 189. If you look at the next map, this is a heat stress map that L1 Taylor developed from Iowa State. He's now retired, but if it was developed mostly for the Midwest. If you accumulate heat over time, you get above 140 and you start to lose yield. And there's a lot of areas in the Midwest approaching those numbers. You've still got a heat wave going into next week with very little precip. My concern is that August looks very dry, and that's not ideal for soybeans. And then you can see this is the average maximum temperature. This was from July 16th to July 20th. July is ending very hot, folks, with maybe some moisture, but not enough to offset that heat. And then this is the minimum nighttime temperatures. This is your hidden problem in the Midwest, in the I states, because we can't quantify it. Maybe we'll find out in 6 to 12 months, but it's going to be very difficult for the USDA to tell you these numbers until the combine starts rolling.
Let's talk about the yield projections. And this chart here shows some of the trade estimates. We are at 180 versus USDA at 183. A lot of the others are higher than that for corn, that is, for the 26 US crop. And for soybeans, we estimate it to be at 52 bushels per acre versus USDA at 53.
So you can see crop profit, agriculture, economic insights are all very high because they're looking at satellite imagery, NVDI, and DVI. Vegetative growth, it's all looking green. It all looks great from the road, but you need to go into the field and test it. That's why Pro Farmer does a crop tour. That's why I do a crop tour in Ontario. But the reason why Coordinator's lower, that's why we're lower. And of course, we'll see what happens on August 12th with the USDA, but I'm very concerned about that northern central plains. It's just been too hot, too dry. If the month of August is dry and hot, I'm going to lower that to 179. I'm going to lower my bean yield to 51. You don't need a big drop in yields because demand is too strong. You're going to get a tighter balance sheet. And that's why futures all of a sudden in the month of July, which is very rare. When was the last time you saw grain prices rally in the month of July? I think the last time was 2012, which was the 2012 drought. Now, we don't have a drought like 12 because the I states seem to be untouched, but that rally in 2012 went up right through that August 12th crop report and peaked. This time around, I think prices go even higher because of Chinese demand. We did not have that Chinese demand in 2012. And then this is the long-term forecast.
The flash drought and deficit in soil moisture is concerning and could get worse as we enter August. The heat is doing the most damage to lighter soils. If U.S. yields are cut all the corn and soybean US balance sheets get tight very quickly. The 8 to 14 early August weather outlook looks hot and dry, and which is not ideal for soybeans. 2026 US hurricane season is 50% of normal.
Yeah, so the temperature looks hot and very little precip for that central, northern, um, maybe, east of the Mississippi. And then here's your hurricane season. The reason why I'm bringing up the hurricane season for 2026, and it was 75% of normal, now down to 50% of normal, because unless we get a hurricane down here or a tropical storm at the end of August, early September, that sends moisture up into the Midwest, those bean yields are not going to be 53 or 54. And that's my biggest concern. And nobody's talking about this at all. And we're 1 month away. So we'll have to wait and see.
Let's look at the latest North Dakota crop tour. So scouts on the tour estimated hard red spring wheat yields at 48 bushels per acre, down from 49 bushels last year, but above the 5-year average of 45.8 bushels per acre. This estimate is well below USDA's forecast of 58 BPA, as recent heat and dryness have raised concerns about crop conditions. This state seems to be one among the leaders in terms of issues.
Yeah, so look for the USDA to lower the yield from 58 to something lower in the August 12th crop report. I think this wheat tour is overestimating yields. Why? Because of that heat wave we've just talked about. It's going to continue for the next week or two. There's some farmers ready to harvest in the next week. It's probably 2 to 4 weeks away, but I got to think that you're going to have less test weight, maybe higher protein. But I don't think the market's factored. I think maybe short term because of Ukraine-Russian headline news, we may have peaked. But I think this chart goes higher as we get into the month of August or September. And then this is, this is Chicago wheat. You can see the key bearish reversal. Bearish, not bullish, but we've been in a bull market here in the last month or so. So that key bearish technical reversal, but it's only 1 day, and the weekly close is below last week. So unlike in Kansas City, where it still closed higher, as well as Minneapolis, Chicago was not able to close above last week. So we'll have to wait and see what happens as we get into next week.
Looking at canola futures, canola to close out this week was off by about $11 per metric ton today, but still above the prior resistance, which is at 803. Again, is this all just technical correction from overbought conditions?
Yeah, we're getting correction. It's healthy. If I was to draw my a bullish trend channel, maybe we're overextended short term. The funds took it a little bit high we need to buy some more time, basically. But I still think we had higher.
Let's look at what's happening with the USMCA, or otherwise CUSMA, as we call it here in Canada. At a time when that is being reviewed, as of July the 30th, 2026, July the 20th, rather, I apologize, Trump signed 3 proclamations imposing an additional 50% tariff on select Canadian imports, including products such as wine and cement. The measures will take effect in 30 days' time, so that gives time for negotiations or renegotiations. The U.S. administration cited Canada's tariffs and quotas on U.S.-made vehicles, arguing they disadvantage U.S. automakers and incentivize production investment in Canada rather than the U.S.
This one baffles me. I'm sorry, folks, but why is Canada taking so long to negotiate? They had time. They waited till July 1st. They still did nothing. And then they get this threat from Trump. I'm not surprised. It's the way he does business. He wants to threaten to hopefully get you to do something. But instead of traveling around the world and doing trade deals with other countries, which is fine, I don't have a problem with that. You're trying to diversify your economy. But when 80% of your exports go to a country or two countries, also Mexico, largest unprotected border in the world, why are you ignoring this trade deal? What are you afraid of? You're going to have to make some concessions. He's not happy. It's his deal that he negotiated last time. So, you know what? It's business. It's not personal. Just get something done. This is ridiculous. It's keeping the Canadian economy captive. Businesses don't want to invest. It provides too much uncertainty. The Bank of Canada has done nothing with rates for 6 months. Meanwhile, consumers can't afford a mortgage at 4%. Use some common sense, folks. I don't get it. This should have been a done deal by now. Excuse me.
Let's finish off with the latest update from CFTC. So as of the 21st of July 2026, as you guys can see there, significant buying in the grains. So in corn, almost 50,000 contracts bought week on week, taking that net length to almost 93,000 contracts. And in soybeans, over 52,000 contracts bought. Soybeans net length closing in on 125,000 contracts. And there with spring wheat futures, we have flipped from net short to net long as of the 21st.
So guys, look at the wheat. If you look at this, you've got 19,000 short SRW and then your long HRW, HRS. If you follow our podcast, we've shown you those CFTC charts on individual wheat contracts. The funds can go long 188,000 contracts, that entire complex. We're not even close to that, and yet we're trading to new contract highs. So when I say to you that you can retrace 38% of the 22 highs at 820, no problem. You can you get to 950, which is the 50% retracement? There's a lot of room and a long runway for these guys to keep pushing this wheat higher if they want to go long. And so last week we said the funds would be about long 500,000. They're long about 540,000 as of this report. And after this week's buying, we think they're long about 705,000 contracts. So we're not quite as high as the May 13th high, but we're getting there. And I think by the time we get to harvest, we will be there. Thanks for watching. Take care. Have a great weekend, and we'll see you next Friday. Don't forget to subscribe to the channel. Otherwise, I may have to stop making this podcast, and you guys are going to miss out. I'm sorry. So send some love. Tell your friends. Tell your other farmer friends. See you later.
Catch you guys later.